Assalamu alaikum and welcome to the Oasis Focus and Finance Show. I'm your host Shafiq Morton. As always, it's great to be with you. In today's show, we focus on retirement fund savings and the impact of death and disability. During the program, we'll unpack what it will mean to the members involved and how it will affect their various investments. We'll also talk about pre-retirement and post-retirement savings in connection with the same topic. But joining me in studio today are Michael Swingler and Naweed Ashtiker from the Oasis team. Gentlemen, Assalamu alaikum, good day.
Alaikum salam, Shafiq.
Michael, let's start off with you. How do we understand the scenario of pre-retirement investment products and savings with regards to our topic of death and disability?
Pre-retirement savings products are products that you would contribute to during your working life. So if I take myself as an example, a portion of my monthly salary would be deducted, and that would be invested into a group retirement scheme, which is part of the Oasis Crescent retirement funds. And that would be invested and accumulated during my working life. So there's the regular monthly cash investment, and then that grows through the underlying investment returns that are achieved on those funds. And the golden rule of retirement savings and pre-retirement savings is that the earlier you start, the better. Because as you know, and all the listeners would know, the power of compounding returns over a long period, and with the Oasis philosophy, where you're getting consistent real returns that are in excess of inflation, that is the key to ultimately ensuring during your pre-retirement savings phase that there's sufficient funds ultimately to provide an income during retirement. So if I then reach retirement age, my pre-retirement savings would be transferred into a post-retirement product, and there I will be able to draw a monthly income. If we look at the underlying portfolios of pre-retirement savings, that would be a balanced fund. It would be regulated by pension law, and in line with the Oasis philosophy, it's focused on high quality listed investments and strong diversification across the portfolio. I think important for today's discussion, and we're going to refer to it a couple of times, it's important for investors to also understand that there are different rules within retirement funds. So the rules from one product provider might be different to another, and it's important that investors receive advice on this and that they consider carefully what the rules are. The last point I want to make on pre-retirement savings is that there's in the market, there are a lot of products that are mainly insurance based or insurance type of products, or products that are guaranteed. And just to caution investors again that they need to look at these products carefully, because it's likely that these products might not meet all the requirements of a Sharia compliant retirement savings product. And again, it's important for investors to receive advice on that.
Thanks, Michael, for that. Naweed, what about the issue of conditions in pre-retirement funds in the case of death?
In many cases, the main member of the fund would nominate death beneficiary or beneficiaries. And basically what this means is that upon the passing of the member, these beneficiaries will then be entitled to the benefit of the funds that was whatever the value may be. Now, it's important to note that this beneficiary nomination process is something that's flexible and that can be changed over time. So if we can put this into an example, somebody at my age, I would leave, let's assume 50% to my wife and 25% to kids. So that makes up the 100%. But as you get older in life and say like at your age, Shafiq, you might be at a point where your kids are now independent and you want to change that and maybe leave something behind for your grandchildren. So those are the sort of things that we look into, and the beneficiaries of this can be amended at any point in time, as you progress on with your life. So it's important to note that the member is allowed to nominate a beneficiary, and upon death of the member, the money will get paid out to the beneficiaries as stipulated in his beneficiary list. If the member does not nominate any beneficiaries, what happens then is that whatever the value is or the benefit in the funds will then be accumulated as part of the estate of the individual. And once it goes into the estate, you have to wait for the estate to be wound up. And this can be a fairly lengthy procedure and can take a bit of time. And then the money will then be distributed as per the beneficiaries of the estate. So not as part of the retirement fund, but more as part of the estate. So it's always recommended that that the main member should always nominate the beneficiary just for ease of administration, etc.
Naweed, just to carry on with what you've been saying, what about the case where the person has actually nominated a beneficiary? How does the administration of that go?
There might be some differences between various funds, so I can't really comment on the general practices, but what I can comment on is the case of the Oasis Crescent retirement funds. What happens is, obviously, firstly, we'll need to get notification of that either via or by way of a death certificate. What we'll then do is take the funds of that member and move it into a benefit settlement account where the funds would be held until it's then distributed, or the proceeds are distributed to the beneficiaries. As with all administrators, they may require some additional information from the beneficiaries, things like certified ID copies, verification of bank details, all of those sort of things are normal. In the case of the Oasis Crescent retirement funds, these are all Sharia compliant funds, and they are overseen by a global reputable Sharia board. And these are all, these are Islamic scholars that are the leaders of their field. In the case of the Oasis Crescent Retirement Fund, we'll pay out the value of the fund, which is made up of the contributions made by the member, as well as the growth to the nominated beneficiaries.
Michael, what about the scenario where a beneficiary has been named, from the process of being named to the instance of actual payment?
Shafiq, before we go into that, just to link on to what Naweed indicated, the benefit here for the Oasis Crescent retirement range, compared again to some guarantee type of product, is that quite often a guarantee type of product would end on the death of the member, and there might be a limited benefit for one level of the next generation. The benefit here of the Oasis Crescent retirement range is that the value of the fund that builds up over the years can continue to be passed on to beneficiaries from one generation to the next. And I think that is a key principle that one needs to take into consideration. So if the member passes away, as the advisors, the Oasis team would do a full assessment, but now based on the needs of the beneficiaries. So looking at their short-term, medium-term, and long-term needs, and looking at all the aspects in terms of their future needs, and then provide guidance on what would be the best products available to meet those needs. As I've indicated earlier, within most of the needs, one needs to take into consideration the effect of inflation. So our portfolios, we've got well-regulated portfolios, highly transparent, and the quality and value of the underlying investments have, as you've seen from our track record, has ensured that substantial real returns are delivered over time. So the proper guidance at that point, when the accumulated pre-retirement savings is paid out to beneficiaries, is a key point in that process, and it's part of the services offered by the Oasis advisors once the beneficiaries are awarded the funds.
Michael, let's carry on with you. What about the instance where I might fall ill or I might incur a disability before my retirement date?
There would be definitions of disability within the rules of a retirement scheme. But just to define it broadly, that is where, as you've indicated, due to an accident or illness, the member is not able to continue their employment that they've been qualified for, or that they've built up experience for. And in this case, the member would be entitled to various benefits, which may include the early surrender of the retirement fund. And that means the full value of the retirement fund would be paid to the member, who can then, again, based on advice, draw levels of income to now support the member and his or her family because they're no longer able to work. Again, the principle remains the same, that your capital or your monthly contributions plus the growth of that would make up the value of the fund, and that would then be transferred to the member on qualification of the disability criteria. Again, there are numerous products in the market that might offer some kind of disability insurance benefits. Again, members or investors should look closely at the Sharia compliance in terms of those products. The full Oasis Crescent range of retirement products are Sharia compliant, and as Naweed indicated, we've got a leading global board of Sharia scholars that look at those products and portfolios on a regular basis to ensure that the Sharia compliance is adhered to based on the highest global standards.
Now, we've had a look at the whole pre-retirement landscape in terms of death and disability, but what about post-retirement?
Yeah, Shafiq, I think it's a very important question, and maybe on that to just take a step back and recap. So when we started, we spoke about pre-retirement savings, and these are generally savings that you put to whilst you're still in your working life. So Michael said, while you're working, a portion of the income is coming off and going into that retirement savings. Now, the post-retirement product, whereas the pre-retirement you contributed to, the post-retirement product is something that is going to then pay you that income on a monthly basis. Now, again, very important, the amount of money that you're going to be able to get from your post-retirement product is going to largely be dependent of how much goes into that product. So again, we need to start saving early, and we need to start saving adequately as well. Shafiq, there's a universe of products out there when it comes to the post-retirement side of things. Now, I'm going to speak generally. I mean, within this, there's broadly speaking two different types. You get the guaranteed product, which has got an insurance component to it, and then you've got the investment-linked living annuity, which has got the investment component to it. Now, they might differ here and there, but I'm just going to speak generally about them. With the insurance-linked product or the guaranteed product, these products are typically not Sharia compliant, and how they would work is that you as the member upon retirement would receive an income based on the value of the pension fund or your post-retirement product. This would then pay you an income for as long as you live, or for a time period, 10 years, 15 years, 20 years. The day you close your eyes, it will then pay your spouse a certain percentage, whether it's 50% or 60%. But the day she closes her eyes, the rest of the money, there's no further money available for the family. Now, the very important thing that I always ask people is, can you tell me when you're going to die? No, you can't. None of us can. Mm-hmm. So the thing is, you could retire today. You've saved up money for 40 years through your working life, and within a year you die and half that money just goes. The other option, which is called an investment-linked living annuity, which is an investment-linked product, the income that you derive from this product is based on the capital that is accumulated in there. And you then take an income based on a drawdown rate. Now, there are certain guidelines and certain restrictions with regards to this drawdown that is set by basically its legislation. Now, with this sort of product, you can then determine how much you actually want to take and what is required for you. The other component in both of these products is any form of illness or disability would not affect the income that you're going to be getting, and you will still continue to receive the income on a monthly basis. What we also need to look at is that there are Sharia compliant products, post-retirement products available, such as the Oasis range. Not all of the products out there are Sharia compliant, so you should really speak to your financial advisor to determine what is Sharia compliant and what is not. But again, I want to touch onto the legacy aspect. With the guaranteed product, as mentioned earlier, there is no legacy that is left behind. Once the interested parties, maybe the main member and his spouse, once they've closed their eyes, there is nothing left for the rest of the family. What happens with the investment-linked living annuity? It's the same as the pre-retirement products. You would nominate a beneficiary. So let's just put this into an example form to make it easy. Shafiq goes into retirement and Shafiq nominates his wife as the beneficiary. Shafiq then closes his eyes tomorrow. After the administration process happens, your wife will continue to receive the income that you would receive, and the product would then go onto her name. At this point, your wife would then renominate the beneficiaries, whether it be the kids, wherever she wants to. So that pot of money will always remain. So you're leaving a legacy behind. And then just to touch on further, what we actually do is that the beneficiaries of these products, now you must remember, they could range from small kids or they could range to adults. So we actually sit down with them, and we then take into account a needs analysis, risk assessment, their objectives and their goals, and we then provide guidance to them, because there's different products that may suit different individuals. So whether it be a tax-free investment, a unit trust, an endowment, whether it be local, whether it be global, all of those factors are taken into account.
Michael, let's quickly summarize. We've been talking about the impact of death and disability on retirement savings. So how would you summarize what we've discussed today?
A couple of key points. Firstly, the conditions that relate to death and disability would be different in the case of different products and different providers. And then secondly, it's a very good idea, as Naweed has indicated, to speak to your financial advisor about these conditions when you are looking at products. And particularly if it's important that it's a Sharia compliant product and that you're not earning insurance-related or interest-related income in that product. The Oasis Crescent range is fully Sharia compliant, and what we focused on a lot today is passing on that legacy and nominating the beneficiaries. And that is a process, again, where you can obtain advice. And that ensures that the value of your hard-earned savings can be passed on, as Naweed said, that pot of money can be passed on to future generations. And then lastly, in terms of disability, there is the full benefit of the value of the fund that can be paid out to the member to ensure that the member can look after the family in the case of disability.
Michael Swingler and Naweed Ashtiker, gentlemen, thank you. And that concludes this edition of Focus on Finance, in which we had a look at the impact of death and disability on retirement savings. The first part of a series which continues next week, when we have a look at the impact of divorce and debt on pre-retirement and post-retirement savings. Our guests in today's show were Michael Swingler and Naweed Ashtiker. Should you wish to contact Oasis, you can call 0860 100 786 or email info@oasiscrescent.com. Until next time, I'm your host, Shafiq Morton. Assalamu alaikum wa rahmatullah.